Joining us this morning is Dan Niles, founder, portfolio manager at Niles Investment Management. What a morning to have you, Dan. Good to see you.
Good to see you too, Carl.
Sounds like you think this one, shutdown, could last longer than the one in 18.
Yeah, but it really doesn't matter, Carl. You go back and you look at the one in 18, and during the entire tenure of that shutdown, as I wrote about, the S&P was up 10%. So I think everybody knows this is going to get ultimately resolved. I don't think there's anybody who thinks the government's too small. And so I think people are going to go and focus on more important things to some degree, and I hate to put it like that, but they're going to focus on Q3 earnings that are about to start to get reported soon. They're going to focus on what's going on with the AI trade, and then they're going to focus on the most important, arguably, unfortunately, which is rate cuts, which has been kind of the stimulus, you could argue, since COVID, and if you want to go all the way back, since Lehman. And you're going to get a rate cut on October 29th, and another one probably on December 10th, and that's just going to keep this irrational exuberance alive until the rate cuts stop, at which point we'll have to deal with reality again. But right now, enjoy the ride. I think it's going to be great.
But you call it irrational.
Yes. Yeah, because think about it this way, right? We have a history of this. In the late 1990s, every internet company was going to win. Now, think about where we are today. How many have won in search? You got one. You got Google. How many won in social media? You really only have one. You got Meta. How many's won in e-commerce? You got one. That's Amazon. And you have a bunch of smaller players, obviously. Now, if you look at the AI space, people think everybody's going to win. Everybody's going to be worth $1 trillion. And that's ultimately going to coalesce down to a few players. But in the near term, when you've got rate cuts, when you've got animal spirits, people want to believe. And if you go back to the late 90s, NASDAQ was up 86% in 1999. To start the next year in 2000, the S&P declined 5%. But the NASDAQ was up another 24% in the first 2 months and change of 2000. So right now, people want to believe. There's no problem with these circular investments that you see happening, or not everybody putting up great numbers in AI. But until people start to deal with that, the market, much like in late 1999 to 2000, I think keeps going higher, fueled by rate cuts.
So, Dan, do you think the rate cuts, the ones we're likely to get, are purely just sweeteners, or are they necessary to keep the economy from buckling a little bit here? And what are the implications of that if we don't, quote, need them?
I don't think you need them, but our job isn't to try to figure out what should be happening. It's to figure out what you think will happen. So the analogy I would draw is I remember being on your program back in 2021 saying, how the heck is the Fed thinking this is transitory? But they did. They didn't raise. And the S&P finished the year up 27%. Now, obviously, 2022 was a different story when they finally figured out maybe the worst inflation in 40 years isn't transitory. And they started to raise in the most aggressive manner possible. So right now, it's hard to argue you need these extra rate cuts when you've got GDP growing at 3%. You've got inflation that's been above target for 4 years. But none of the reality matters, unfortunately, which is the Fed saying this is transitory as well. And so they're looking at the jobs picture, which is obviously you've got negative numbers coming through. Now, also, you don't have immigration, and you have people, aging out of the workforce. So you can say, well, how many jobs do we actually need? But if you really have a dual mandate, how do you justify cutting when inflation's nowhere near your target and you're saying it's transitory again, and you really screwed up not that long ago? But that's reality in terms of what might be going on underneath the surface. But what I'm trying to say is in the near term, I don't think any of that matters like in 2021, unfortunately.